Hello guys. So welcome to another episode of Swing for Peeps. Sorry I've been away for a while, for I think about 2 weeks now. I've not posted anything, and that's because I've actually been busy. I have another life outside of Forex. Okay, of course, those of you that have been following me for now know that I'm a services engineer, so I just don't do Forex. I have other things I do, and that's kept me busy. Yes, I've been trading, I've been analyzing the charts, but I had to attend to other things, so I've not been able to post any updates. The weekly reviews we do, I've not been able to follow up on that. I'm very sorry for that, but going forward, I'll be posting a video, like I have been posting. So today, we'll be talking about head and shoulder pattern without much further ado. All right. Most of you will be surprised that why am I talking about head and shoulder pattern when I've clearly stated in the past that Swing for Pips is all about supply and demand. Okay, please, if you have been a regular follower, you'll have understood by now that, and you must have heard me said many times in the past that look, yes, we are supply and demand trader. Doesn't mean that we shouldn't pay attention to other trading strategies because they affect your decision making process. They affect how you approach the markets. They affect how you execute your trades. Okay, they affect your decisions in terms of entering the markets and exiting the market. So you have to bring in all this flavor into your trading system, okay? Because in a way, it's going to help you. I've always told my students something that look, in this market, there's a strategy called experience. All right, the best strategy out there is strategy called experience. No matter the strategy you're using to trade, you really have to consider other strategies because you have to approach this market holistically, okay? And you should understand that there are seasons for every strategy. There's a time that trend traders will be profitable, and then those who are into ranging markets, okay? Those who are into bullish markets and those who are into bearish markets. So different markets in different market cycles can actually affect how profitable you become in the market. What am I trying to say? That if you have a hint about the strategies, you should know when your strategy is out of style or out of season. You should adjust accordingly. Okay. So for instance, if you see a bullish pin bar on the monthly time frame, you won't say because I'm just a supply and demand trader, so I'm going to ignore that. No, you don't. Can't ignore that because it's really gonna bite you. It's gonna come to bite you in your equity to affect your equity curve. Okay. So I've always preached this gospel that look, respect, even though you have the discipline to stick to your strategy, also look out for other key elements from other strategies. And so one of it is head and shoulder pattern, and we're going to be looking at it today. And the reason why I'm bringing this up is because I want you to use this avenue to teach you a lesson. Okay, to actually bring something to light. All right, how looking at other um, key elements in other strategies have helped me to stay away from a losing streak in the market. Okay, and our focus is going to be on gold. So before I go into the chart, I'm going to just do a little bit of breakdown of the head and shoulder pattern and how we actually apply it in supply and demand trading here in Swing for Pips. Okay, so come with me as I make some breakdown of this pattern, okay? So right here, I've been able to do some illustration, okay? What do we have here? Let's look at this first, all right? So we have two formats of the head and shoulder pattern. We have the bearish pattern, okay, or we have this actually the head and shoulder pattern, and then we now have the inverted head and shoulder pattern, which is the bullish representation. That's the bullish pattern, okay, for bullish entries. So when the market is trending and you see something and you see this pattern, all right, just know that we're looking at a reversal, okay? And then when the market is trending downwards and you see this pattern, just know that we're looking to be bullish, all right? It's something that repeats itself, has repeated itself over and over. Okay, so these are patterns that have been recognized in the market and have been proven over time to play out. Not 100% of the time, of course. Of course, nothing's 100% in this market, nothing's guaranteed. Okay, we only look at patterns and then we kind of, give the market gives us a hint by presenting this pattern of where it wants to head next. So looking at this, okay, so what's actually the key element of the head and shoulder pattern? The head and shoulder pattern simply means that there's a shoulder, there's a head, and then it's another shoulder, all right? Just like a human being. And then we have the neckline. Okay, so we have price coming from below, all right? It goes up, it forms a high, come down, and then goes up. It breaks structure here, all right? There's a break of structure in this area here. Okay, makes another high, comes down, and tests the previous low. Okay, it tests the previous low, forms something like a support and resistance here. Okay, and then there's a bounce off in this area. It goes up. It doesn't come to eliminate this high. Okay, and then it goes somewhere around here and then goes down. Okay, most of the times I'm going to be talking about Fibonacci in some other class, all right? But let me show you how I apply it here in head and shoulder pattern. So if I'm to take the Fibonacci level up to this place here, okay, that's this move, this push down here. Usually the head and shoulder pattern usually come to the 61% retracement or the 51% retracement, but it never goes above 100, okay? And then the price starts to turn around this area and then it goes down the other way, okay? And then it takes out this neckline right here. Okay, so don't forget, okay, it doesn't take out the high. That's the highest high it's created here. Okay, it now turns around this area here and then goes down to the other side. So the same thing also applies to the inverted head and shoulder pattern. Okay, let me just type this out. Okay, so that it doesn't cause any confusion. Inverted. Okay, so let us expand this a little bit. Just to give it that. So this is the inverted head and shoulder pattern, and then this is the regular head and shoulder pattern. Okay, so now it's the same principle that plays out here. Okay, price is coming from, it's bearish, 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 and then it comes down, it goes up. Okay, makes a higher low, all right, goes down, makes a lower low, comes down, makes another lower low, okay, and then goes up. It doesn't eliminate this line here. Okay, can you see this line here? This point here, it's not eliminated, but it actually breaks structure here. Okay, so this point here is valid, and then price come down all the way here. It comes back, does a retest around here, and then goes down again, come back up here, and then it continues to the upside. Okay, so this is the basic concept of head and shoulder pattern, and there's a way we project how far price is going to go when you see a head and shoulder pattern. Okay, the idea is that once price forms this high here, all right, and then forms the right shoulder, what you want to do to project how far price can go after breaking this neckline here is that you take a measurement from this high to the neckline. Okay, and then now you now transfer that high, that measurement the other way. Okay, you just simply do something like this. You get your trend line. Okay, you just pull it. Make sure it is straight. Okay, hold your shift key. Hold down your shift key, and then when you get to the neckline, you release. Okay, you release it at the neckline. All right, so what you want to do is duplicate this line. All right, you just hold down your control key, duplicate the line. All right, and then you use it to measure this. Okay, so if from here to here is say 500 pips, then you should also look at the projection of 500 pips as the possible area or the possible level where price can get to as a projection. Same thing applies to the inverted head and shoulder pattern. Okay, so whatever projection you make here, the same projection is maybe what price may end up doing, coming all the way to this area here. However, like I said, we're only predicting. Okay, we're only kind of forecasting how far price can go. So once you see this is actually a reversal pattern. Okay, the head and shoulder is a reversal pattern. Okay, it gives you hints of price reversing. Okay, so you have to pay attention to this. I think I've given the lay of the land about head and shoulder pattern. Let's see how we're going to apply it to the gold charts that we'll be looking at, me and my students for a while now. and I've actually advised them accordingly. Okay, so let's go to the charts. All right, so now this is the gold chart. This is the gold chart of the daily of the daily um of the daily price action. Okay, so what are we looking at here now? From analysis, okay, using supply and demand, we can see that price have actually been playing around this zone right here. Can we see this zone right here? This daily zone. Okay. If you check the previous videos that we made, all right, we've actually established that gold is in a bullish trend. Okay, it's in a bullish. That's in an upward movement. Gold is bullish. All right, from the weekly, that's the monthly is bullish, the weekly is bullish, the daily is bullish. All right, so this was established from the past. All right, so now we are currently for about how many weeks now, or let's say days or months, for about this is like three months plus. Okay, gold have been in a range. Okay, and that range is as a result of price bouncing off this supply zone. Okay, and currently prices at this zone again. Okay, so now I've been following because sometimes I try to look at what's happening in the market. I look at what other mentors are saying. I look at the analysis going around. Okay, and I see a lot of mentors saying sell gold from this region, sell gold from this region. And okay, the first time they try selling gold, okay, and gold have been coming back to this zone, okay. But if you look at my previous video from 2, 3 weeks, 4 weeks ago or so, I've said that I've advised my students to desist from selling gold because gold is in an upward push. So we don't have any business selling gold. Right, yes, even though we are at a decision level on the supply time frame, that's on the supply level on the daily time frame. Okay, even though we are at a key decision zone of either of selling, because price have the tendency of actually bouncing off this zone. But I made something very clear that look, the global economy right now has taken serious hits, okay, from all the major currencies, especially the United States. Okay, the GDP is bad. Okay, the PMI is bad. The manufacturing index is bad. Retail sale results is bad. So all the results coming out of the US have been coming out very, very negative. This way you want to lean towards the fundamental. Okay, this way if you stick to only technicals, you continuously, you know, have a dip in your equity. Okay, this way you actually have to marry fundamentals and technicals. Okay, so for a while, myself and my students have stayed away from selling gold. Okay, all we do is to look for buy positions. Okay, we've been buying with at least whatever pullback we get. Those of us that know what we are doing on the lower time frames, we're placing buys on gold, and we're actually looking for gold to eliminate this zone. Okay, it is my it is my expectation that price actually eliminates this zone. I'm not looking to sell from this zone right here. Why so? So two things. One, fundamentally, okay, price is bullish. Okay, because right now gold is actually a safe haven asset that people are actually running to save themselves from what is happening in the global crash. Okay, so fundamentally gold is bullish, and then technically speaking, the second factor is that there's the head and shoulder pattern that are formed on the daily time frame of gold. All right, which is this. Can we see this? Look at this here. This is an inverted head and shoulder pattern forming. All right. Okay. And then so I'm just going to move this out of the way. All right. And then what do we have? We have the neckline right here. We have the neckline right here. We have the neckline right here. All right. Let me write the neckline right there. So just for clarity, this is actually the location of the neckline. Okay, that's this location. So just for clarity, I'm just gonna move it up so you can see the neckline right here. Okay, so let me further highlight it. Right here, this is the neckline. Okay, so now we're looking for price to actually come and puncture this zone right here. Okay, come down, give us a demand zone to trade off. That's what we're looking at for gold. For gold to push up, come down, give us a demand zone around there on the lower time frame, on the daily or on the 4 hour, and then give us a push to the upside. Okay, so those of us that have been trying to sell gold, please once again desist from selling gold. Gold is not a good sell. All right. The best you can do is sit on your hands. All right. Wait for the best opportunities to present itself. All right, and then the market will reward you accordingly. Okay, so stay away from selling gold. Okay, please look for buys on gold. All right, so let's not forget we have this is the head here, this shoulder, and then this is shoulder. All right, so this is how we applied the head and shoulder pattern to our supply and demand strategy. Okay, yes, we have a supply zone right here. Quite all right, so we have a supply zone right here. However, we're not going to honor the supply zone because one, fundamentally, coming from the fundamentals, okay, we are bullish, and then from the technical standpoint, we're looking at the inverted head and shoulder pattern pointing upwards. Okay, so in the coming week, we're actually looking for price to make a push, to make a break of this supply zone, all things being equal, and then give us either a decent demand zone that we can buy from, and then we buy to the upside. So please be careful of gurus that are saying sell gold right now. Okay, careful of gurus. Well, like I said, I'm only forecasting. The market is the key deciding factor right here. The market tells us what to do. We only forecast, all right, but let's see what the markets have to do. Okay, but by the time the market comes to take out this high right here, then it has given us the confidence that yes, it actually wants to go to the upside. So we're looking for buying opportunities going to the upside. I've not placed trade for over 2 weeks now. Yes, because the market is taking its time to arrange itself, to form patterns, to form demand zones, clean demand zones. Okay, because what is happening right now is that the time frames are actually out of alignment. So we're waiting for the time frames to align and give us a clean trend through which we can actually place trades and make good profits. The DXY, that's the dollar related pairs, are actually they're picking up right now. They're trying to align. I can see if you check very well, the daily time frame is actually making some push to the upside. And so let's see what the market have for us in the coming days and in the coming weeks. All right. So for now, please stay away from selling gold. All right, and stick to buying gold right now because that's what the sentiment is right now. The monthly is a buy, the weekly is a buy, the daily is a buy. So let's trade with the trend, which is the easiest thing to do. Just follow the trend and save your equity curve. All right. So I hope you've learned something from this episode. Please stay disciplined, stick to your trading strategy, and don't ever forget to swing and chill. All right. Have a lovely week. Bye for now.